Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here with your Wednesday morning pre-market webcast. Okay, we'll start off with the daily chart. And what we've seen, and I'll show you on the hourly in a minute, but generally what we've seen is moves down into the 27 to 29 area, the area of the weekly pivot, hold up as support. And with each one of these moves, you get a hard move back up towards the 44 to 47 area, basically the area of the 50-day exponential moving average, which is the red line here on the daily chart. Whoever wins that range is going to win the rest of the week into next week. So you've got two markets. You've got the market before 2 o'clock, and then you got the market after 2 o'clock today. So, I mean, effectively, this is a vast majority of this is all about the FOMC. I will give you the same advice I give you every time we do this. Don't game the Fed. Don't go walking in there at 159 thinking that you know what the reaction is going to be, because if you're right, you'll end up taking it off for probably not much. But if you're wrong, you'll hold it into oblivion, because that kind of a trade is not about price. It's not about risk. It's about you wanting to be right. And trades that are predicated on you wanting to be right or wrong tend to be disasters. So don't do it. Just don't do it. So as we hop over to the hourly, you can see, the bears had the beginning of something pretty good. You've got the high here. They couldn't take it out yesterday. They really needed to take out the high from Monday. So you got a lower high. Then you come down here and you make a lower low. The problem is they overshot weekly pivot, they rejected it, and they took it back up and made a higher high versus yesterday's high. So now we're kind of in between, whether you want to call that triangle action or whatever. The reality is you got weekly pivot down below, you got 50-day exponential moving average up top, and because the 50-day exponential moving average runs right through here, right at about 47. So, you're stuck between these two areas. I wouldn't be at all surprised if we did what we did for the majority of yesterday, which is yesterday afternoon, which is just kind of hang out. I was saying to my subscribers, we're in the waiting room. We're waiting for Janet at 2 o'clock. So grab a magazine, play around on your phone, and 2 o'clock we'll figure out what this market wants to do next. Don't overtrade. Don't get bored. Don't overtrade. Yesterday afternoon was the tightest range we've seen in over 2 weeks. I mean, it's bound to happen, right? But the bottom line is the band ride ended last Friday. You've got weekly pivot support consistently. You can see it there on the chart. If there's any positive reaction post 2 o'clock, the move is to the middle band on the daily chart, which today comes in around 56. Remember, you've got the announcement and you've got the press conference. If the total body of work there is negative, then whatever the down move is has got to break and hold the weekly pivot on a closing basis. Not spike below and reject, which is what we saw in the overnight. Needs to break and hold and close on weekly lows. That will get everybody thinking, look, maybe we need to head back to the lower band, which is down in the 21,108 area, not too far away. So the bottom line is the key catalyst is in 5 hours. Don't chew yourself up waiting for it. There'll be plenty of handles to harvest one way or the other. Don't game it. Don't guess. Watch price. Find the range. Sort it out from there. Okay. Everybody have a fantastic day. Follow us over at Twitter at Princeton Trader. Come check out the website, PrincetonTrader.com. Come check out the chat room. Come trade this stuff with us. We would love to meet you. I'll be back tomorrow morning with another webcast. Trade them well, everybody.